It's Thursday, February 10th, 2022. And today we're talking about Canadian quantum heats up, Trulioo goes shopping, DOZR raises money to expand geographies, Hopper increases its valuation, corporate Canada invests in ClearEstate, the crypto rush continues, and Rumble is making some noise. Let's get started. First up, Canadian quantum heats up. Alex, it's cold in Canada, but it's hot in quantum. What is going on here?
Well, quantum actually needs the coldness. That's why Canada's probably good for it. There's two pieces of news related to quantum industry this week. Both were covered by the Globe and Mail. First, D-Wave plans on raising $340 million US by going public on the New York Stock Exchange via SPAC. They're raising $300 million via SPAC, $40 million via private placement, and investors including PSP Investment, NEC Corp, Goldman Sachs, Yorkville Advisors, and Aegis Group Partners. On the other hand, the other piece of news was IBM is going to build its first Canadian quantum computer by partnering with Quebec, the province of Quebec, and the cost is $121 million to build this computer.
So there's a lot of money floating around quantum, but for those who might not be really on top of the latest and greatest in tech, what is quantum computing?
So if you know, a traditional computer basically is programmed with zeros and ones, and it's binary. The instructions are either in 0 or 1, and there's some limitations with the ability to compute that way. Quantum computing, which is based on the understanding of quantum physics, uses what's called qubits. And what they have the ability is to be in between 0 and 1 or 0 and 1 at the same time. So it allows it to exponentially more computing power and solve problems we haven't solved before.
All right, Professor Norman. That all sounds very complicated. Why does anyone bother?
Well, right now, people bother because if it actually works and you can get quantum to be widely available and affordable, it could solve problems we can't solve now. You could use it to advance healthcare or health technology quite significantly. You could use it for new versions of crypto security and probably make all current versions of crypto security invalid. And it could have a huge economic impact. Even at the current state of quantum, the NRC, so that's like the National Research Council of Canada, estimates that the Canadian quantum market could be worth $142 billion by 2040.
Got it. So this is a big deal. We're a Canadian tech news show. What's the relationship between Canada and quantum computing?
Well, relative to the other computing technology, Canada's actually one of the leaders in this one. D-Wave created the first commercially available quantum computer. Xanadu is trying to solve the supercooling problem because right now a quantum computer has to be basically way from any any noise or and also has to be kept at like negative 200 Celsius to work. So Xanadu is trying to get one that can use at room temperature. And we have also an area known as the Quantum Valley where there's a lot of quantum research going on.
Got it. So seems like things are heating up even though they need to be run real cold. Canada's a leader. Why is D-Wave SPACing exactly?
It's in a way the perfect SPAC candidate. It's an interesting space where lots of the public would like to get exposure because it sounds like the next technology and the next economic boom. The results for D-Wave have not been great, and private capital does not want to put more money in it. It actually was already recapitalized once before, so all the past investors were wiped out, new investors came in. It desperately needs capital now. It's burning through cash. So this sounds like a lot of the other companies have gone SPAC. Interesting technology that the public wants exposure to. Private capital is a bit wary of it. So my guess is this will probably perform on par with the other SPAC companies.
Which is, what's on par mean?
They're all below their SPAC price. But again, this is not investment advice. Invest it based on your own research, not what I'm saying here.
Oh, we do, Alex. Don't worry, we do. And what about the IBM news? What do you think about that?
Well, I think this is interesting. Quebec is investing in its future. Quebec Inc. has a habit of doing this. Like lots of venture capital funds come from different Quebec pension plans in the province of Quebec. And so Quebec, looks like they went out and said, hey, IBM, we know you don't want to, you're not going to build a quantum computer in Quebec without our involvement. We'll subsidize the cost. You make it available. And so this is actually an investment in bringing skills in a new industry to Quebec. And hopefully, the province benefits it from going forward.
Got it. So you're looking at this not just from a monetary point of view, but also from, building the skills and capabilities in the workforce.
Yeah.
That is so socially minded of you, Alex. That's amazing.
Well, you
What
know
can
me.
our community learn from all this quantum computing news?
So quantum proves the allure of future possibilities. What I mean by that is that a lot of the innovation ecosystem, what gets people excited is what can be next. What's the next big thing? And people are constantly willing to invest in that if it's a possibility. Now, the flip side is the future, and this possibility can remain 20 years in the future forever. Quantum's, D-Wave, I think, did its first computer almost 20 years ago. You look at autonomous vehicles. 5 years ago, people said it was 5 years away. They still say it's 5 years away. Many new technologies grow rapidly. They attract investors, employees, and high valuations due to the potential. But they may never deliver on it, or it may take many more years than expected. And then when they do, if they eventually do it, they create a huge economic boom. So from the community, it's trying to get the timing right. It's very difficult, but if you do, there's a big economic upside. If you don't, you've probably spent 5-6 years advancing technology. You don't see the economic benefit from it. And so for employees, if you get lucky with your timing, you'll make a fortune. And I think also what's interesting here, again, from a government perspective, it's worth investing in it, because if it does pay off, you then have you're leading a new sector globally.
Got it. I love it, Alex. And one of the ways to stay up to date on those trends, so you're not too early and not too late, is to subscribe to the TechTO newsletter. That's right. You can keep up to date on the Canadian tech ecosystem and the future of all things happening in Canada. Alex, what can the community expect in tomorrow's newsletter?
Well, I've got a surprise for you, because that graphic's a bit out of date. There's a new Thursday newsletter. Our first version went out today, and it's a new long form newsletter. It's a bit different. What we're doing is getting someone that's a tech community leader to write us in depth about a subject they like. So today we have an article or a posting on what's the future of accelerators and what it means for founders.
Ooh, written by?
Jonah Mindenak, from
okay. So somebody who's
Ventures.
running an accelerator himself.
Yeah. He goes through the history and what it makes, what this future is.
Very cool. So you can subscribe to keep up to date with the latest news, trends, advice, events, and overview of all the Canadian accelerators and the future of what holds there on our website at techto.org/newsletter. All right. Up next, Trulioo goes shopping. Where'd they go shopping, Alex?
Yeah, they went to Denmark. They bought a Danish startup called HelloFlow for a rumored $50 million US in cash and equity. And again, I couldn't tell if this was the first or second acquisition in its history. Different journalists had different opinions.
Got it. Okay, but is there a shared opinion on why they made this one?
Well, Trulioo made it clear why they acquired HelloFresh. They said, HelloFresh had basically great UX, made it easy to onboard customers, and it's going to be incorporated into Trulio's product. And it was something they had in their product pipeline they thought would take 12 to 18 months to build. So they've just accelerated their product pipeline.
Got it. And that's a lot of money. How did they pay? Buy now, pay later?
Yeah, maybe that there might be an earnout. We haven't heard about that. But look, Trulio's doing well. They've got 100 million revenue last year. They're claiming to be doubling every year. They're profitable. They also raised $150 million in primary capital recently. So they have money there.
Got it. And what's the relationship between Trulioo and HelloFlow? Are they were they competitors? Is this market expansion? What's the strategic opportunity here?
The strategic opportunity here seems to be product enhancement. So we've talked about in the past that lots of people do distribution. There's three reasons to do an acquisition. There's distribution, product enhancement, or product expansion. And we've seen a lot of other acquisitions recently for distribution. This one's product enhancement.
Sure. There's also the ones for team, but I hear what you're saying.
Product enhancement team, they're basically the same thing. When someone says, okay, we have something to plug in, someone says, okay, we need a team. Like we talked
so
last
now
week.
We see product enhancement. So do you think this is going to continue? Like, do you think we're going to see more either from Trulioo or from Canadian companies doing product enhancement acquisitions?
Well, yes. The short answer is yes. We haven't talked about this or seen as much, as some other trends in the last year. We've talked a lot about mega rounds, Tiger investing, angels investing later. But if you go back over the last year, we've seen quite a few of our scale-ups acquire other companies. Can think of Clio, FreshBooks, Covio, Lightspeed, PointClickCare, and many more have acquired companies.
I think it's awesome. And so we are big proponents of the inorganic story of startups and technology companies in Canada. If you are a founder or an entrepreneur in the Canadian tech ecosystem, what can you learn from this, and what can you do for your company based on this trend?
Well, first of all, as Canadian companies scale, they continue to be aggressive. So what does that mean? I think, as you said, there's organic and inorganic growth. And lots of companies, historically Canadian companies were blamed for getting, decent organic growth, getting to a certain size and being acquired. What's happening now is we're getting good organic growth, we're scaling, but to continue to have a high value and be relevant, you have to continue that growth. And you cannot rely just on organic growth. Maybe a few special companies, but eventually you have to get an organic growth. And what does that mean? That means acquiring companies. To acquire companies, you need several skills. You need to identify, negotiate, and then basically integrate. And because you have three different skills, lots of acquisitions historically have failed. But what we need to do as an industry, as an ecosystem, is build our muscles, build our skill set at all three of those, and eventually you'll see a higher percent of those acquisitions work and these companies grow. I think for employees, this actually changes dynamics. Historically, you hear a lot of griping saying options are overvalued, your equity is not going to be worth much, so just worry about your base pay. Now that we're seeing companies not only scale, but able to continue growth organically and via acquisition, it should continue increasing the valuations, and you should put more credence, or hypothetically, your options should be worth more because the company stocks should keep going up because the public markets like growth. Finally, there's a bunch of people that complain that historically Canada, by selling early, was selling the IP that our universities invested in that got commercialized by our companies. Now I think we're starting to buy IP from other countries. So we're starting to become the acquirer versus the acquiree.
I think it's exciting. And Alex, with this whole new crop of aggressive startups, it's time for us to bring back our Canadian rocket ship list for 2022. There are only 6 more days left to nominate your favorite Canadian startup, whether they're acquiring inorganically or not. Ones that you nominate will be featured. So you've got to be sure to follow us on Twitter, LinkedIn, and Facebook to find out how you can nominate and get involved. Any rocket ship you're looking forward to seeing if they're included on the 2022 list, Alex?
I don't want to tip my hand and influence people's voting.
Okay, you've got some insider information. All right. Next up, DOZR is raising money to expand geographies. Tell me the story of DOZR and this geographic expansion, Alex.
So Waterloo-based DOZR raised $27.5 million in a round led by Builders VC and BDC Capital Growth Venture Fund with participation from Basecamp Equity. DOZR is an online marketplace for heavy equipment rentals, and they established good traction on Ontario marketplace and in the Florida marketplace. And so they're using this money to expand other markets they've already, get more liquidity in markets they've already entered and expand to additional new markets.
Got it. Do we have an idea of what markets those are going to be?
Yeah, I think they're Texas, Washington. They have a list if you read around, if you go to the website.
Got it. So, I mean, there's not a lot of folks that play in this space, the heavy equipment space. Why are we following this DOZR story in particular?
Well, I think it's interesting for several reasons. First of all, everyone thinks that one market, a marketplace is a marketplace. But locally constrained marketplaces are very different than national marketplace. So it's like comparing eBay versus Uber. They have similar, business model from the outside, but there's different dynamics due to the nature of their business. They're very hard to build. Marketplaces, when you launch them, you need to get liquidity. There's a supply and demand issue. Lots of times you have to subsidize them to get to a point where you lose liquidity. So the transactions happen quickly and then network effects start kicking in. But the difference between an eBay and Uber, or eBay and a DOZR, is in eBay, you get this liquidity. It's, market by market, like, hey, it's for some Pez and it's some baseball cards, and there's some adjacent ability and there's some economies of scale. Once you establish a marketplace for DOZR in Florida, they have to go see the same, so they can take their playbook and replicate it in Texas, but they have to go get the supply and demand and have to invest in that again. So, it's capital intensive. And also it, if you don't move fast, someone may see what you're doing in Florida and replicate it and take California off the market. So it's an interesting to see because I think they're underestimated. And then also what happens, they don't look that great. And all of a sudden they're working in many different states or locations. You have a huge profitable business.
Got it. So this is really about understanding what it takes to build a local marketplace.
Yes.
So if you are building a local marketplace in the community or thinking about building a local marketplace, what do you learn from the story of DOZR here?
Well, first, that local marketplaces are capital intensive, more so than normal marketplaces, more so than probably SaaS businesses. I think the greater learning is the importance of a business model to a company. I think most people in the tech ecosystem say, okay, it's a technology company. We should take a similar approach. But as a founder, investor, employee, it's important to understand the implications of the business model you've chosen. There's a difference between SaaS, local marketplaces, and global marketplaces. Um, so look at a couple differences. The different economic trajectories and timeline. Marketplaces are tough to get going and show relatively slow growth and per user economics at the beginning. But once you hit that inflection point and network effects kick in, you start seeing a lot better unit economics and a lot better margins than at the beginning. Versus SaaS business, at the beginning, the unit economics should sort of make sense. The other implication here is how do you deliver value? A SaaS business usually shows, you're trying to help solve a problem and you can accomplish it with a solo or group task and you're trying to make it better and faster. With a marketplace, what you're really doing is you're lowering the cost of discovery and transacting. So the value props are different. And I think the last thing in this space is, there's many more local marketplaces to be built, and Web3 is going to have interesting impacts on the dynamics of these marketplaces. And finally, as a founder, I'd say here, the lead in this round was Builders VC. We just talked about them a month ago. They just raised a new fund. So when you go to look to raise, it's good to understand where that VC fund is in its cycle of deploying capital. If they have a little bit of cash left, they're probably going to be harder to get money from. If they've just raised a large fund, they'll probably be a bit more open to talking.
I love it. And I saw, Alex, a couple posts just the other day about local marketplace inside the TechTO insider community. So if you want to join a community of Canadian tech founders, entrepreneurs, and investors, got to check out the TechTO.org insider membership program. Alex and I are there every single day answering your questions, making connections, and helping grow the community for you. Alex, who have you met recently in the insider program?
Can't remember his name, but someone was looking for a new place to live. They're just moving to the country. So I was suggesting a few rental websites they could go find that 2-bedroom.
Very nice. And maybe some rental agents too, yes. Find them a place to live.
Yeah.
One of the really cool things about the insider community is there are all sorts of talented folks from all over the world who make the TechTO membership program their first stop on their way to Canada. So it's a great place to meet folks who are just about to enter the market, snap up talent before it's here, and also just help give back and guide new Canadians in their journey to helping build amazing startups, scale-ups, and technology companies here in Canada. All right, Alex, we're going to do some quick takes. Are you ready?
Yeah.
First up, Hopper's increasing its valuation. What did they increase it to?
To $5 billion USD by doing a secondary sale for $35 million.
And last week we talked about them taking on Airbnb.
Yeah.
Did that just like that jump up their valuation?
I don't think that jumped up the valuation. What was more important in the press releases around this, the secondary, was the metrics, which put that in context. So, they 2 billion travel sales last year, 300 growth over in 2021 over 2020. Monthly revenues are 375% higher than pre-pandemic. So when you go back to what we read about last week, saying that this short-term rentals can add $1 billion of bookings a year, you see how important so to continue to grow and why they have to do more products. And if they're worth $5 billion, another $1 billion hits and basically increase their 50%, hypothetically they could be worth $7.5 billion. Pretty
nice return for whoever just put in the money last week.
Yeah.
And what's the takeaway for people building their businesses today?
Well, I think it goes back to what we said earlier about the scale companies. Even when you reach scale, the way you get value is by continuing to grow. And you can do it organically or inorganically. In this case, Hopper is doing it by adding new products.
Yeah. Startup equals growth. All right. Next, Corporate Canada invest in ClearEstate. Who's Corporate Canada?
So, we can get to who Corporate Canada is. Maybe I'll just tell you about this round first. ClearEstate raised 13.2 million USD from Omer's Ventures, participation from Diagram, Torsar, and NA Ventures.
Okay, that is a good list of corporate Canada. I like that.
So let's get first of all, the takeaway. I don't think this round would have been possible 4 or 5 years ago. Omer's Ventures existed, but Omer's was more focused on late stage, just a bit earlier stage. And then you go look at Diagram. That's basically Power Corp behind that, or at least launch Diagram. And I don't know how many years. I think that's been around for about 5 years. Torstar was going through hell 5 years ago, got purchased, and now you have private investors focusing on becoming a digital powerhouse, or trying to be digitally relevant at least. And NA Ventures is National Bank's venture arm. They were dabbling in investments before, but they built this corporate VC arm to be more relevant. So this is corporate Canada realizing that there's more to Canada than real estate and natural resources, and high net worth family offices. Traditional corporate Canada are creating venture arms to invest in the future of this country. And I don't know if this could be done 3 years ago this round.
Right, but what's your opinion on corporate venture arms? Is this a good thing that they're investing in the future of the country, or not?
So more capital in the ecosystem to a certain extent is better until you get too much capital, and I don't think we've hit that point. I think it's like any other investor. You have to understand what their incentives are, how they're going to react, and how they're going to back you. And so there's some corporate venture capital you might not want to take, and there's some, and some you might want to take. It's just like some VCs, you might want to have them behind you, and some you won't. I think the bigger problem with corporate venture is if they try to change the dynamics and squeeze other people out of competitors and try to anoint winners and hurt the overall ecosystem.
Yeah. And I think the reputation is changing. I think we're seeing some really smart and sophisticated people lead some of these corporate venture arms. I'm hoping a bunch of these bets are going to turn out really well for the startups, for the corporates, and for Canada. Next, the crypto rush continues. Okay, this story never ends. What happened this week?
Newton Crypto, another crypto trading platform focused on Canadians, raised a 20 million USD round from DV Chain, CI Financial Corp, Sing Capital Partners, Anthony Popolano, who is known as Pomp on Twitter, Tiny Capital, which is out of Victoria, and Snow Devil Capital, which is Toby from Shopify's, I think, family office, and valuing to coming at 200 million USD.
Oh man, when is this going to end, Alex?
I don't know, but this is the third week in a row Canadian crypto exchanges announced a round. I just think this is an example of too much capital going into a market. This is, I think, in our first time this happened, we made it one of our bigger quick takes. And my worry was you're going to see a lot of capital go to this market, and it's going to be undifferentiated. It's going to be hard for anyone to become a winner with the good margins. So this
is it a winner? You think it's a winner take all market, at least by the regulatory body? Like maybe there's a Canada winner take all here.
The regulatory body likes more competition because they'll keep. I don't know if this is a natural network effect. There's no benefits to having you trade on the same platform as me, but there's probably economies of scale, and just more players there means the customer acquisition is going to be higher, and fees are going to be lower, which is good for the consumer. It's bad for these businesses.
Mm-hmm. Didn't your crypto take a hit the last couple of weeks, Alex? Aren't you? I don't know.
Yeah.
Selling getting the kids to work part-time jobs now that your Ether is down.
Part-time jobs anyways.
Okay, good.
All right, they're making more NFTs right now.
That's right. You're going to start using quick takes to show your kids NFTs. I love it. All right, last up, Rumble is making some noise. Oh man, do I love this story. What noise is Rumble making this week?
So Chris, the CEO of Rumble, basically published a tweet with offering Joe Rogan $100 million to come exclusively to the Rumble platform and leave Spotify. And got a bit of publicity about this. Even got a couple US newsletters to make it their head story.
And do you think it's a bit of a publicity stunt, or do you think there's actually a possibility that Rogan joins Rumble?
So Joe Rogan would have to renege on his contract with Spotify. Spotify would not have to react. All sorts of reasons I don't see this happening. This is more of a PR stunt, but it's actually quite smart because it reinforces the positioning of the Rumble platform with the audience that it already has. Hey, you want freedom of expression? F this. We want Joe Rogan here because we're not going to censor him. And those are the type of customers and users that creators and users that Rumble has. So that's great to reposition with his fan base and their creators. And second of all, there was a huge bump on the valuation of the SPAC that's about to, SPAC entity that's about to buy Rumble, because people thought that it's a possibility. So great PR stunt, Chris. I like you, very bold of you, and don't know if it was, don't know the legal implications and stuff like that, but we need to see a bit more excitement and a bit more boldness here.
This is one of my favorite growth hacks, which I call news hacking, which is just inserting yourself into the news cycle. And I think you've got to be aware of what's going on. You got to have a good positioning. And here it made a lot of sense. We don't see Rumble offering Neil Young and Joni Mitchell a home for their content. We have them offering Joe Rogan, and I think they just did this to perfection.
Yeah, I remember you doing something with the Super Bowl in Canada.
That's the same kind of thing, my man. All right, Alex, what an amazing week in Canadian tech. If you haven't already, you got to like and subscribe to TechTO wherever you're watching or listening, and we'll see you on the TechTO Inside.
We're in the business of delivering impossible things. We're in the business of delivering things that nobody's ever seen before.
If you build that culture, you'll come up with really cool and innovative stuff, and literally could be in the next multi-billion-dollar idea.
So this conversation is largely going to be about scaling yourself and scaling your leadership team.
I want to talk about one of the biggest struggles that I think a lot of startups face early on, which is building initial traction.